please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. It's been a rocky February for equities after a strong start to the year. A Motilal Oswal Securities report indicates that although volatility may be returning, the earnings story is definitely improving. Gautam Duggad, the head of research institutional equities at Motilal Oswal Securities, is with us to talk about this report that they have written. Gautam, hi, good morning. I was just going through your preferred ideas in the large caps and in the non-index large cap space. You like a lot of these automakers like M&M, Motherson Sumi, Exide, and we've seen good numbers come in from some of these battery makers. Amara Raja has done very well. Wanted your thoughts in the auto space, both auto ancillaries and the OEMs. Is there still a lot more to go despite the run-up we have seen?
Good morning, Sonia. So the way we look at the space, it's a beneficiary of a couple of things. Clearly the improvement in rural sentiment, and our story for the last 6-9 months has been pick up in rural consumption led by several favorable catalysts. Obviously, monsoon will have a very strong impact going forward. We don't know how it will pan out this year, but as of now, the feedback from the corporates, the feedback from channel check suggests that the rural story is progressing quite well. And given that we are just 10 days off the budget, there's been a lot of emphasis on various rural and farm activities. So that is the big picture view. Now within that, what we like are companies where valuations are not completely out of the whack, where the component of rural is much higher, and that's why you see our preference there for M&M. Within the auto anch space, we continue to prefer the leaders in their respective categories at this stage. A lot of the auto anchs are mid caps, and given that we have seen a lot of correction over there, we don't want to jump the gun right away. We still prefer quality names within that space, leaders in their respective categories, and Motherson Sumi fits in quite well in that space. We are expecting strong growth over there. It's a recent initiation for us. Even the acquisitions that they have done are expected to do well given the order book and margins. And they are themselves trending 1 year ahead of their own vision of $18 billion by FY20. We're expecting that to complete by FY19. So that's what the construct is as far as auto names are concerned. Select names with very strong underlying rural thesis, and obviously in the anch space we prefer leaders in the respective categories.
Okay, Gautam, hi, good morning. And once again, going through that list, what's really interesting for me is the way you're playing the housing theme. It's via Oberoi Realty, many believe perhaps the best-in-class realty stock, and Repco Home. If you could tell us the rationale for the same.
Sure, we are quite positive on the overall housing theme. The thrust for that has come from the government, whether it is affordable housing or the mid-income housing segment. Now, as far as real estate is concerned, we don't have a very deep coverage at this moment. This is the only stock which we cover. But the theme is clearly pick the quality stocks at this stage of the correction, leaders in the respective space with very strong balance sheet and the business models. And Repco clearly is also slightly contra at this stage because they've had a very poor FY17 given the regulatory issues and court-related issues. Those things are now behind, and we're expecting disbursements to pick up. And even there, we believe that the valuations are quite favorable, and we are expecting disbursement to pick up over there with the issues impacting Tamil Nadu particularly behind us. And apart from that, we also like HDFC, which is also highlighted in that large cap preferred idea segment.
Yeah, but otherwise there is an absence of financials. There is also ICICI, that's all. I mean, what about all the insurance themes, mutual fund themes, asset managers, NBFCs?
Sure. So Lata, while financials remains a very large part of the index, given the way the yields have moved up, one needs to be very cautious. And if you recall our conversation 2-3 months back when we were discussing the preview for the results, we said that we are very cautious on the NBFC space given the way yields have picked up and the valuations. That remains a concern for the broader market as well, but more importantly for the NBFC space, which have had a very tremendous run. And they remain quite vulnerable to any spike in yields. So that's why you're seeing very select preferred approach in that space. We like Shriram Transport Finance, but that stock has run up. So that's why it is not there. And Repco is there because things are turning around for them. And in large caps, we like HDFC, where we are still expecting around 17-18% kind of a disbursement growth, and 50% of HDFC's value anyways come from the other subsidiaries. So this is another way of playing the same theme that you highlighted, which is AMCs and insurance.
Also discuss the FMCG theme, because within that you like names like Imami, but this quarter we've seen that Imami has done worse than its peers. I mean, its volume growth was just 6%. Others have done much better, even Marico for that matter, Godrej. Do you think you would want to switch at some point, or are you keeping the faith with Imami?
No, so we like Imami. I think from a next 2 to 3 year perspective, this is one stock I would like to own in that space. The reason is very simple. They've been impacted the worst in terms of DMO and GST because they have a very high proportion of rural and wholesale business. And on top of that, the Kesh King has not done as well as one would have imagined when they did the acquisition. But clearly, as GST and DMO effect wanes off, I think these are the guys who are going to bounce back the first, because they were the worst impacted. They have higher salience also in eastern region, which again was worst impacted post DMO. That is point number one. Point number two is that they have almost 60 to 80% market share in top 4 categories, which are the cash cow categories, or rather power brand categories as they call it. So once those categories bounce back, the impact at the bottom line level is going to be much higher compared to the top line level. And stock has been absolutely flat for the last 3 years, whereas other FMCG companies have had a very significant rally. So we still, like Imami, notwithstanding the bad quarter that they have delivered in this quarter.
By the way, what's really bouncing is the PSU banking space. And now it's across the board buying that you're seeing in PSU banks. Of course, still led by Bank of Baroda, but a lot of stocks are moving to high point. Andhra Bank, for example, Canara Bank, even something like a Syndicate Bank.
Even IDBI Bank.
Even IDBI Bank. So it's now getting a bit secular in nature.
No, I can understand Indian Bank, their numbers were good, but IOB, I mean,
yes.
there are quite...
So the best example is Syndicate Bank. I mean, after a loss also, the stock is actually in the green. So looking quite interesting. Gautam, thoughts on the PSU banking rally and anything that you would want to buy here?
See, we've been very selective in that space. We still continue to prefer SBI, notwithstanding the results that came on Friday. The reason to opt for SBI is there is a lot of flux which is going on in the P&L and balance sheet over there. So the good thing about SBI's results was that 90% of whatever they've reported on slippages, it has come from the already identified the stress segment, right? And watch list has incrementally declined, whether it is SBI, ICICI Bank or BOB. Valuations have obviously come off. There is no incremental near-term trigger. The only comfort that we derive on SBI is valuation and capitalization as far as the PSU banking space is concerned. So we do not want to right now venture out of those quality names, even within that space.
Okay, Gautam, thank you for stopping by and speaking with us. It was a good conversation, not just on the markets, but on individual stocks as well. That's about equities. Huge moves coming into Bank of Baroda right now, as we pointed out. Biggest intraday gain in the last 4 months, post a good set of numbers. But let's talk about commodities as well. Manisha Gupta joins in with a roundup of all the commodity and currency market action. Manisha, good for equities. Crude is falling day after day, but what's the update there?
Well, yes, it's a good day for commodities as well. We have seen gains come back in case of the commodity markets in Asia right now. The crude oil prices, after declining nearly 7 to 8% in the previous week, have seen some bargain buying on the lower side. Well, nearly 7% of decline in 1 week on the charts is kind of getting oversold. So you have seen some opportunity buying come in there. So a percentage point of gains is what you are seeing on MCX as well. Of course, the fears about increasing supplies, especially from US, is something that continues to weigh in. And these markets as well will very closely watch out for what's happening in the US dollar and the global equities markets as well. But there is a bit of a buying on the lower side on the gold and silver as well. Good gains actually coming back in case of the silver prices there. On the lower prices, there is physical buying that is picking up in many of the Middle East and Asian countries. Even China physical buying has picked up in the last 1 month or so, and that in turn has been supportive. It is the base metal prices which continue to be quite choppy. Copper prices, after falling nearly 4% in the previous week, have seen some buying come back. Aluminum continues to hold around those 8-week lows. The lead prices, remember, they declined nearly 7% in the previous week, are trading flat. So there's no change in fundamentals there. But you have seen the steel ingredients come back a bit on the ground. So 0.5% and more of gains is what you are seeing in case of nickel and zinc. Trading strategies is what we have from Anand Rathi today, and they actually have come out with buy calls for many of those commodities. In case of gold, on the higher side, they are expecting the prices to go up to 30,250. They also extend those buy calls in the other commodities. For crude oil prices, they are expecting the prices to surge back to 3,880, and they also expect the base metal prices to see some strength. But zinc, they have a sell call with 217 on the lower side is what their target is.
We're discussing earnings, and next on our list is Syndicate Bank, because that bank again, like big brother SBI, reported a loss, not something the street was prepared for. Let's invite Melvin Rego, Managing Director and CEO of Syndicate Bank. Good morning, Mr. Rego. Like I said, the street was not prepared for a loss. The explanation was that you all have front-ended the slippages. So should we expect lower slippages in coming quarters?
Yes, most certainly. See, we have increased our advances by about 12%.
Yes.
And most of this increase has come from the retail, agri and MSME sector.
Okay.
In pure retail credit, we have grown by 12% on an annualized basis. In agri by 16% and MSME by 20%. So overall, our RAM portfolio has gone up by 12%. Now, when you look at the composition and we are looking at rebalancing of the portfolio, we have done a fair bit. We were at 53% in December last year, and now we are at 56% RAM. The whole purpose is that we reduce the concentration risk and have capital light assets.
Okay, I take
now coming
that
to the profitability, and this what you mentioned.
Yeah, exactly. I mean, the worry is more that it's gotten eaten up by slippages and more.
I'll first focus on the good part, that is the NII has grown by 17%. The operating expenditure has remained absolutely flat. Now, where there has been a drop is in the other income, and that comes mainly from Treasury.
Yes.
The other is from provisioning. Now, I'll come to Treasury first. In Treasury, the profit booked is 500 crore less than the corresponding period of the previous year. In addition, there is an MTM provision of 200 crores. So the total comes to 700 crores minus from the Treasury side.
Fair point.
Now, on the provisioning, we have made a provision of 2,090 crore as against 785 crore corresponding period of last year, and in September it was 892 crore. Now, for NCLT accounts, we had to make a total provision of 1,190 crore, of which in Q3 the provision required was only 490 crore, and in Q4 it was 700 crore. Now we have made the entire provision, that is 1,190 crore, which includes 700 for Q4. We have front-ended it to this quarter itself because it is an eventuality.
No, I take that point, sir, but the slippages are rising.
Yeah, no, exactly.
Sorry.
No, I just wanted to extend that point, Mr. Rego. So in that case, do you expect to return to profitability, say, in Q4 itself or Q1 of next year?
In Q4, we expect to definitely break even, and in Q1 next year, we would be in a profit. In Q4, there is a marginal chance of us being in the black, but when you mentioned about the increase in NPAs, frankly, if you exclude one telecom account, the NPAs have remained flat. And I think that needs to be taken cognizance
But will the telecom account be written back in the fourth quarter?
We are hopeful of that, and if that happens, definitely it is something which will help us greatly in not only the NPA levels, but also in terms of the profitability. In fact, the positive, this is the NIMs have gone up. And our domestic NIM has gone up from 2.42 to 2.74. And even if you look at the NPA levels, while gross NPAs have increased marginally from 9.39 to 9.62, and that is again because of that one account which I spoke about, the net NPAs have reduced from 5.76 to 5.44.
That point
and we have increased provision coverage from 56% to 60%.
Okay.
So I look at these as positives.
Of course.
And also our CASA level has increased from 30% to 32%.
Okay. How much is that one telecom account, Mr. Rego?
I wouldn't like to mention specific numbers. All I can say is that 60% of the slippages during this quarter have been from corporate, and 50% of the corporate comes from that one account.
Okay, okay. Well, just finally, what's your capital now? What will be the capital level be after the
total
bonds?
Capital is 11.88%.
Okay.
Tier 1 is 9.06%, and CET1 is 7.15%.
Okay.
Now, government has conveyed its intention to infuse 2,839 crore into the bank, and this would be done by the end of March. With this, we see our CET1 itself being in excess of 8%.
All right. We'll leave it at that, Mr. Regu. We're out of time. Thank you very much for joining us. As we wind down on Bazaar, actually, we are leaving the markets in a fairly healthy spot. It's almost climbing back to the highest point of the day. So the dip has been emphatically bought and held on for about half an hour or more. And the mid-caps, of course, have had a glorious day. It's 6 stocks in the green for one in the red.
Yes, 300 points higher on the mid-cap index, 6:1. I mean, as we discussed in the morning as well, some indications were there last week itself that mid-caps at least are trying to bounce back. On the index, maybe there's some incremental selling, but Lata, PSU banks really. PSUs in general, today's been that kind of a day. A lot of buying in PSUs. Anyway, that's the wrap on Bazaar, of course.